The markets are looking shaky. And the question that I find most people wondering, and sometimes even myself, but that question is this motto of sell in May and go away going to hold true now that we are just a day away from May? I'm a poet, I didn't know it. We have some really, really, really big news today and some big macro pictures that you must understand to answer this question. So today we're going to bring you all of the data and evidence that you need to make your own decision. I'll tell you what I'm doing. And we have some insane altcoin alpha that you really do not want to miss. So guys, if you are excited for this episode, excited to learn what's going on, do us all a favor and destroy that like button. If you're new to the channel, what's up? My name is Kyle. Welcome. I've been in crypto for 12 years, bringing you guys all the alpha I possibly can so you guys can make the best possible decisions and absolutely crush it in this inevitable bull run. So right now, guys, right now you can see that this is the today venture bubbles here, and not looking so good. Not looking so good on the weekly either, but in the hourly, seems to be okay. And what is going on here? Maybe you can see, but we've been trading on Bitcoin range bound here between these two levels, about $60,000 at 73,000, and just range bound for a while. And this is very, very typical as we've gone through in other videos before. But if you zoom in here, this 1 hourly candle looks really good. What's going on right now? Are people front running the Hong Kong Bitcoin and Ethereum spot ETF that will start trading in approximately 3 hours from the moment of the recording this? Very, very interesting to see what happens here, and we will get into this in just a bit. Meanwhile, before I get into the rest of the macro news, I'm going to show you guys something that's very, very important that you need to know about because, well, it's going to be a limited, finite window for you to participate. So, Commonwealth, tomorrow at 3 p.m. Central European Standard Time, will open up the first fund. That we call it Alpha Fund. I call it the Proof of Concept Fund. Commonwealth will literally be the largest fund on the planet that's owned by the people.
Commonwealth is an all-in-one investment platform, opening up access to everybody.
I think that we're on the verge of a super cycle.
There's a lot of bullish momentum that's happening from ETFs. This is the first time we've ever seen a bull cycle where before the halving, we actually are hitting new all-time highs. I mean, that's super exciting. Crazy.
I've never seen an opportunity like this for normal retail investors to get into projects of this caliber.
So there you have it, ladies and gentlemen, launching in just under a day here. And so what you want to do is make sure that you're following Commonwealth at Join Commonwealth for update on how to participate. I believe the first fund is going to be fairly small, around $1 million. If I'm not mistaken, so I expect it to fill up relatively fast. Let me remind you guys of the significance of the Wall Street oracles, the ones who are bringing deals to the funds here. And I think what's important to note is not only did you see AAA projects in the free fund that launched a while back, but you can see here the oracles, and you can see that you can go meet them over here. But these are essentially the folks who are helping to procure deals for the fund. And I expect in this first fund, it's gonna be a lot of hot deals. And even though the markets aren't looking so good right now, what you can count on is early stage investments doing exceptionally well, curated by some of the best VCs in the entire space. And you can see the list of projects here from these oracles that we have on board. The investments are insane, right? These are primary investments before they're traded on the secondary market, meaning that they got in. These are VC rounds, right? And so you can just see all kinds of insane deals here. And And this is what kind of caliber you can expect them to bring to the funds in Commonwealth. So, guys, it's a big opportunity. I believe it's going to close out fairly quickly. Just want to bring your attention to it as the first thing that we talk about today because it's very significant. Anyway, let's move on. Now, this is just weird to me, right? Like I talked about this in the last video, I think, but 3 days in a row, BlackRock has zero inflow or outflow. Like other people have zero, but like they have got zero often. But BlackRock having 0 3 days in a row seemed suspicious a bit to me. And this guy, Rajat Soni, says, are the Bitcoin ETF numbers being manipulated? How is it possible that there is zero inflows and outflows from IBIT for 3 days straight? Is it possible that BlackRock isn't selling their holdings when their clients sell? Does this mean in the future, if they don't sell, we may never see deep bear markets again? Something to keep in mind if you're on the sidelines. To me, like I said in the last video, it might seem more evident that they're focusing attention on Ethereum at the moment, considering the fact that that ETF is on the brink of approval in May. But you also have the Hong Kong markets, which are now have approved and start trading later today, the Bitcoin and Ethereum spot ETFs. And so it might make sense, since US hasn't approved Ethereum ETFs, that BlackRock is preparing, because right now, China/Hong Kong will have a head start and capturing market share, a significant one as well, until the US ETFs are approved. So you can see that Chinese spot and Ethereum ETFs go live tomorrow, or depending on when you're watching this, today. And that could be the front running that we see over here. I mean, you can see, this is a nice green candle. We're back to almost from a low earlier today of, below like 61,750 to now approaching 64,000. Hong Kong says that they're going to have, so they expect a larger first day than USA, which means hundreds of millions of dollars will flow into Bitcoin and Ethereum. There's some differences too. Like this is what a lot of the ETF issuers in America were fighting for, was in-kind redemption and subscriptions, meaning that that they can put Bitcoin in and take Bitcoin out of the ETF, versus in America they have to take, it's just a cash in and cash out, which is not so nice. That also creates selling events, which are taxable, and so this is going to be a way. And I expect that that China will follow, because it says mainland Chinese investors are not allowed to invest in the Hong Kong ETFs. But we do know that one of the largest asset managers that's based out of this one, China Asset Management, which manages people's money in China, but it's based in Hong Kong, they will have access, and they're huge. I forget how many billions of dollars they manage, 55 billion or something. So they will have access, which is kind of, I guess, the kind of loophole. So we will see how this plays out. But I expect this to be a pretty bullish factor. I don't know if it's going to have a huge impact on price right now, because there's larger things at stake here, but they are going to allow other countries other than Hong Kong to invest. So, for example, like a lot of the East and Middle East. So if you're in Singapore or Middle East, like UAE or Saudi or whatever, they can invest in this one as well. So we'll see how much of an impact it has. Now, you can see Willy Woo says here that there's a little secret from this part of the world. The Asian market and user count is bigger than US and European markets combined. So you can see a lot. It doesn't mean that there's more wealth, but there is a lot of wealth in Asia for sure, which means that we could see some big competition coming. And we know that there's always this kind of competition between East and West. So it's good. More competition will drive more demand, which will drive prices up inevitably. So not only do we have Hong Kong, but we now have Australia, another country to add to the list of, like I said before, a domino effect essentially of Bitcoin ETFs being approved around the world. Who's next? I don't know, but it'll be someone next, and then someone next, and then someone next, and then someone next. And soon enough, probably by the end of the year, I expect that we will have, I don't know, 15, 20, 30 countries that have Bitcoin spot ETFs. So, of course, the most significant would be US, China, Japan, in a way. And we're going to talk about Japan here in just a second. Now, the question is, sell in May and go away, or are we going to follow the tradition where in May there has never been a negative month in the year of a halving? So what you can see here that we have had for the past 3 Mays negative, and we've never had 3 negatives in a row, or 4 in a row. So this would be a record. If this May, it would be a record as in 4 negative Mays in a row. But also, it would be the first time ever that there was a negative month in the month of a halving. So we'll see. I mean, of course, at this point, pure speculation, but there's a lot of factors playing here other than just speculative Bitcoin here. But I can tell you guys that this is completely normal. As you see here, go back and look at, essentially, this is the 2016-17 bull run. You can see that it was 38% correction on its way up, 40% correction on its way up, 35% correction, 41%, 40%, 27%. So the whole insane 2016-17 bull market had 1, 2, 3, 4, 5, 6. Is it 7 pullbacks? And then we had the last bull market, the 2021, we had 1, 2, 3, 4, 5 pullbacks. Not as severe, you see. 21% down the first time, 14%, 31%, and 26%. And now coming into this bull run, which is the 2023, 2024, 25, we've had, you can see more mild-ish, 25%, 21%, 19%. So we could expect to see, several more of these along the way. We are right now at like a 19% pullback. So this is pretty common, and we're definitely still in the bull run, which means that, in my opinion, I'm not selling anything right now. I prefer not to try to trade the markets and time the bottom and time the top. If anything, if you're making any more money right now, it's a great time to dollar cost average into your favorites, altcoins, Bitcoin, whatever it is. Because we just don't know how much longer we're going to chop sideways. Some people say it'll be all the way until September, or this could all end today when the ETFs come in and we bust through another, I definitely think that the Hong Kong ETFs are not priced in. We will see what kind of manipulation happens here, but let me go and show you. Here's the longest time from Rec Capital says the current corrective period for Bitcoin is as normal as it gets. Retrace is 18% deep currently. Typically, pullback is between 18 and 23%. Retrace is currently 20 days long. Typical retrace in length is 2 to 3 weeks, at most 2 months. So if it follows the typical retrace period, it should be almost over very, very soon. At the longest time that we've had, for 2 months, then that would still give us about 1, 2, 3, 4, 4.5, 5 weeks left still of this kind of negative sideways price action before it comes back to kind of the previous top. So guys, it could happen as soon as today. We could bounce back to significantly in the next couple of days this week, or it might take a few more weeks. Regardless, I think just hold steady and do really nothing except for maybe reallocate, take the time to study the positions that you're most bullish in and go, reposition into those. So if this is, I don't know, this is just a technical analysis from this Jackie's saying that kind of showed you the range bound that I was talking about earlier, this blue line being support. And he's saying that if we happen to break below this blue line, which is like that $60,000 mark, we could go down to like 52,500. I don't know, but if we do, I think a lot of people are going to buy it up. And this is why I say dollar cost average, because if it does go down that low, we're going to see another 60% correction in alt. It's going to feel really, really, really brutal. And this will be a point of capitulation where a lot of retail investors who are still here or have entered the market recently will leave, and they will sell their coins to more sophisticated investors who understand what's going on. So don't be one of them. Don't make that mistake. More macro news. First Republic Bank officially collapses and seized by regulators. Banking crisis 2 begins. Again, this is just going to be, this is an election year. So this bank must be bailed out. And how are they going to do that? Well, they have to print money in the short term just to bail them out, or it'll be acquired by another bank who's not really hardly solvent either. But the point is that they cannot let these depositors' money go to zero. It would look extremely bad for the Democrats in the election coming up, and we just know that that's going to happen. So, when we had the last banking collapse last year, that was actually a bullish catalyst. So far, the markets haven't reacted to this one way or the other, but this is going to be giving us a bigger picture on what's happening with the money supply. And coming up, this is going to give us the biggest picture of all. This is what a lot of the world is talking about right now. What you're looking at is the chart of the US dollar compared to the Japanese yen. Insane, right? And this is not good at all. So basically, the Japanese yen has been plummeting about, I think, 23, 24, 25% versus the US dollar in the past year. And this is brutal. So why is this so brutal? You might think, well, it's Japan, who cares? No, it's very important for us. Very, very important. There was maybe some manipulation happening here, probably for good reason, because if this happens, if the yen continues to lose in value, it's going to mean big problems and send shockwaves through the entire world. Why? Well, I'll tell you guys in just a second, but this is something that we need to watch very, very closely, because it can dramatically affect the entire markets. So Max Kaiser says, and no matter your opinion on him, it's actually, I'll tell you in a second, but very few are aware of what's going on here and the risks involved. The yen carry trade has been the linchpin supporting global liquidity for 30 years. If it blows, the credit freeze of 2008 will look small. And Zero Hedge says, the spectacular currency implosion of the world's third biggest economy continues. Yes, Japan is the world's third largest economy. And in case you don't trust Max Kaiser, then we can look at Edward Dowd, who was ex-BlackRock, managing $14 billion in a BlackRock fund. And as it says, yen is depreciating and yen carry trade under pressure. This is the big one here. Regulators warning of clearing company bankruptcies. Moves by government to cut off self-custody of Bitcoin. This is in the United States. So there's this big battle right now of self-custody of Bitcoin. That's insane. Are you nuts? Like they believe that it's just disgusting. Bank failure announcement after the close of market today, which was the Republic First Bank or whatever. So this is a brewing kind of storm happening here. Now, what is this yen carry trade? And so yen carry trade essentially is Japan for like the past 30 years has had basically 0% interest rates on borrowing money from them. So what people have done is they've gone and they've essentially said, okay, well, I can go borrow $50 million in Japanese yen. I could take that Japanese yen, I could sell it for dollars or whatever, and I can go put it in, let's say, like the most risk-free investments historically, U.S. bonds to pay 5%. And so I can go borrow a bunch of money, $100 million, $50 million, whatever, from Japan, put it in U.S. bonds, securely make 5%, and it's free money. But if the yen continues to depreciate, especially versus the US dollar, Japan will have no choice but to raise interest rates to strengthen the currency. Now, this is going to have multiple effects that aren't good. So basically, everybody and how much money is in this carry trade? Well, I asked ChatGPT, and they estimate, some analysts believe it could be close to $1 trillion, with about $300 billion added over the past year, due to ongoing leverage investment strategies by financial institutions and hedge funds. Another perspective points to the size of about 20 trillion. Although this estimate includes broader economic implications of the interconnectedness of global, yes, exactly. That's what we're talking about, the interconnectedness of global financial markets. So I said, what would happen if Japan needed to significantly raise interest rates in regards to the above? And then it says, if Japan were to significantly rise interest rates, several consequences would likely unfold, particularly impacting the yen carry trade and broader financial markets. Basically, to sum this up, these trades that were being made, all of a sudden you've got higher interest on the Japanese yen, which means everyone that's now borrowed Japanese yen to do these different investments, whether it's been stocks or whether it's been Bitcoin or bonds, like a lot of hedge funds have been using this strategy. You can see up to $20 trillion. That needs to unwind, which means that you're going to see a massive reverse of all these investments because people are going to have to be forced to pay back their debt in Japanese yen because the interest rate will be too high to make those things profitable, or they will severely increase the risk on those investments. And so you can start to see a massive unwinding of this carry trade, which has been essentially stable for 30 years. Now, how big of a deal is it? Well, it's a big deal, right? Because the largest country of U.S. debt, bonds, treasury notes, things like that, is Japan, with $1.153 trillion owning. So, of course, if they need to start repaying things, they're going to have no choice but to sell all these U.S. bonds. And then what happens with the United States? Well, the United States has over $1.1 trillion in sell pressure coming into U.S. bonds that would essentially destroy the bond market unless they stepped in to save this. Now, that very well could happen. Again, one more thing to fire up the money printer would be they have to buy these bonds off of the Japanese government. If it comes down to this, what are they going to do? Well, they're just going to print more money like they have been. So the Kobolesi letter says, how bad has the U.S. debt crisis become? The U.S. government has issued a whopping $11 trillion of debt over the last 4 years. By comparison, it took the U.S. 220 years to add the first $11 trillion of federal debt. Within the next 2 months, the U.S. total debt is on track to cross $35 trillion for the first time in history. Since June, the U.S. debt has been rising by $1 trillion every 100 days. And if the current pace continues, another $11 trillion will be added in just 3 years, putting it at $45 trillion of debt by 2027. That's just around what do you do with that? Look at this. What do you do with 45? I mean, and so there's this, it seems like the entire fiat system is broken. Here's what normies see, the US dollar eating all the other countries. What I see happening here is Bitcoin eating fiats, because we know that the fiat system is broken. Everybody just keeps printing, and we know that the fiat monetary systems are all broken. They've reached essentially the end of the line for how sustainable they can be. And I made a video maybe a year ago talking about central bank digital currencies and how there's going to be a great reset on the monetary systems, because how else do you unwind $45-50 trillion of debt? You can't do it. It's impossible. It's actually impossible. And so at some point, there has to be some sort of reset that just wipes the slate clean. Now, a lot of people say that's crazy. Like, how can you do that? How can you just wipe your debt clean? Well, you can go watch my video on it, but I go into detail. But I think that, kind of joking aside, that this is how central bank digital currency is going to get rolled out. I think that what's going to happen is going to be some sort of crisis where the fiat currencies all implode, like Venezuela style. Yes, including the US dollar, and because they have no choice but to continue to print, and this is going to continue to devalue the US currencies. Eventually, everything's going to look like Argentina and Venezuela, and the only kind of safe haven is going to be something like Bitcoin. Or the governments are going to roll out their central bank digital dollars or currencies, and they're going to blame the current monetary situation on the previous administrations, and say, look, they effed up, They were horrible at managing our GDP and our revenue. And so what we're doing is we're going to roll out this central bank digital currency. And to get people to buy into this, there first has to be some sort of major collapse, right? And I think that's going to happen not this year or next year, because I think they can kick the can down the road a little bit longer. Certainly, they won't let it happen this presidential year, right? So I think that we are, because when this inevitably does happen, it'll be bad for all markets and everybody. But hopefully, the longer they kick the can down the road, and the slower the dollar and other fiat currencies depreciate compared to Bitcoin, the more time people will have to look at Bitcoin as a savior. And now we've got these major governments and asset managers like BlackRock who are out there advocating that people put money into the ETFs. And you see now HSBC, which is one of the largest, it stands for Hong Kong and Shanghai Banking Cartel Corporation. It's one of the Far East. It is the biggest bank of the Far East. You've seen these banks everywhere. In a recent statement, HSBC, one of the world's largest banking and financial services institution, advocating giving cryptocurrencies a 1 to 5% weight in a diversified portfolio. So now we have big banks advocating that you put some of your assets into crypto, and 1 to 5 is fairly conservative. That I'm like 99%, 98.9%. But anyway, so this is giving you the picture of what's going on right now, and we need to watch these things carefully. And so if you subscribe to the channel, like, we will be keeping you up to date on what's going on. To me, most of these paths look like like leaning toward a Bitcoin as a world reserve currency. However, there can be some turmoil between now and then. But it does seem like everyone is kind of opening their mind, opening their arms and doors to Bitcoin. And so I think that's the best place really to be right now is Bitcoin and crypto. Okay, so let's move on to some altcoin news. Essentially, you see here FriendTech. Everyone's talking about it right now. Why? Because they got an airdrop coming up soon. What do I think about FriendTech? Well, I saw there's a lot of problems with the first one. It felt a lot like BitClout to me. I don't know if you guys remember BitClout from a couple years ago. It's now DeSo. It just doesn't seem like something that is sustainable. And so you'll see most of the discussions are all around the airdrop and the price of the airdrop and how much airdrop will be worth. And so you'll see a lot of big influencers shilling it, hoping to get some people to be buying this while they're selling it. I am not going to be touching this. I have my own concerns about FriendTech as far as the way it works. My biggest concern, which could be alleviated by this custom curves. I don't know what they mean by that, but this could be one of my biggest problems. Like when I tried FriendTech and created a group, the problem is it got so expensive so quickly that I could only get like 20, 30 people in the group before they become priced out. And the only way for me to monetize that was if people buying and selling the keys to my group. Now, if I'm giving insane alpha, why is anyone going to sell their keys? And so it doesn't give me motivation to want to continue to have the group anymore. If no one's buying and selling my keys, then I don't make any money, right? So what's the incentive there? So this may solve it, this custom curves, but I wanted to give you guys my 2 cents on what's going on here. And I would caution you, apparently 100% of the tokens are being airdropped to participants. It's going to be wild volatility on Thursday, I believe, when this happens. But for me, I'd rather sit back, see how, try the FriendTech V2 when it comes out, see how it is, see if it makes any sense, see if they've made significant updates that are going to make it sticky. But SocialFi is very, very, very hard to break into. It is like one of the things that in the beginning, as a VC kind of looking at SocialFi as something that I was hopeful that we would see, decentralized social take off. But it is such a hard niche to break into. Why? Because you have this switching cost and the audiences already all exist on YouTube and X. for example. And so to get a new platform with a big user base is a really, really, really hard mountain to climb. And let me know in the comments below, guys, if you are bullish SocialFi, if you want me to go do an entire episode on SocialFi. For me, I tend to avoid it because I just don't see that, the one that if one does manage to capture massive market share, it's going to be insane. But I just don't know what it's going to take to do that. So for me, I personally stay away for the most part. And last thing, guys, today is that you have this this kek.bot by PepeCoins, which is launching probably by the time you're watching this. You will have seen this. If not, it could be any minute if you're watching this as soon as I post it. I suggest that you go try this kek.bot. It'll be, from what I understand, a trading portal, and it'll make it very, very easy for normies to trade. I have a feeling that this is going to be integrated with the new testnet of Based AI that launches, because they have been advertising some AI features in this kek.bot, but it's supposed to be a pretty big deal, and it's supposed to make trading much more simple for the average person. And it'll be a Telegram bot, which I'm bullish on Telegram, and I from what I understand, you'd be able to do really simple things like, like, hey, kek.bot, get rid of all my like shitcoin, low volatile or high volatility tokens and put them in blue chips, and like it'll propose some sort of strategy for you. This should be the best trading bot in the space. I guess we will find out in this short period of time. I will be sleeping when this rolls out, but you guys who are watching this can go try this out. And just so you know, there'll be some cool features in here. Like, I hope that I don't know if I can announce this or not, but you should know by the time this is live. This will be white labelable. So anyone could white label this bot. You can brand it under your own brand, and you can create your own custom fees. But always 50% of the fees go back to buying and burning this PepeCoin on the open market. So more buy pressure, more burn pressure, in addition to the Based AI launch, which is going to happen in like a month and a half, when they start doing the brains sell, which is going to massively burn PepeCoin supply. So the pepening is happening, guys, for sure. Just a matter of time. I'll catch you guys in the next one. Bye-bye.